Hello, this is Andrew from TrendFollowingMentor.com. I want to thank you all for coming to this webinar tonight. And we're going to talk about something that most people don't really want to hear about. It's really trading psychology and developing a winning attitude when trading. I've titled this webinar called Mastering Fear by Mastering Discipline when Trading. First thing I want to say is always give the proper disclosures. The proverbial one is past performance is not indicative of future performance. But I want to add that really trend following and trading isn't for everyone. That you are going to have losses. And this isn't just you buy a system or an idea and you're going to start making money. It's a process. It's a learning curve. And this is what I'm here to help you with your learning curve. This is the actual disclaimer. I'm going to leave it on this screen for a minute because we do use hypothetical examples to teach ideas that we want to get across. But the idea is it's for educational purposes only. The next issue I want to bring out to everyone is, for those of you that don't know, I have a book coming out with Wiley Books coming out in the fall. It's called The Bible of Trend Following: How Professional Traders Compound Money and Manage the Risks. I invite you to pick up the book. In the book, what I do is I talk about my exact methodology that I use in my everyday trading that I've used over the last 18 years, as well as I deal very heavily into the ideas of proper mindset, developing a winner's attitude, and all of these issues that are so much more than a system or an indicator, because the unfortunate thing is people think they can educate themselves into success with trading, and it's not really right. You can educate yourself if you develop the proper mindset, and this is what we're going to talk about today. But that is really the most important issue, and people make the mistake, and I urge you to not make this mistake that I even made. I spend so much time trying to find these indicators that avoid losses, or whipsaws, or systems that do this. It cannot be done. And when you try to avoid losses, really what happens, it becomes a heck of a lot worse. This is what the idea is when we're trying to deal with fear. So let me jump to the next slide. Before I say this, I had a conversation with a prospective student, and he asked me if my methodology can help him avoid whipsaws. And I chuckled, and I said no. And he was very disappointed. And I said, I can tell you the truth, or I can, or sugarcoat it, and you won't be a successful trader. There is no system, there is no methodology to avoid whipsaws. And there's a very, very famous trend follower. His name is Ed Sakota. And ironically, he made up a song called the Whipsaw Song, where he sings about a whipsaw. And I think you can find it on YouTube. And he says, if you want to avoid whipsaws, don't trade. So let's start talking about the mindset of what is really necessary. Everything in life is expectations. If you have too great of an expectation of something, let's say it's your birthday, and you expect everyone to stop what they're doing and make sure to accentuate your birthday, and it doesn't happen, you might be disappointed. People get disappointed with their trading results. People think that they have to hit these huge numbers in order to make a lot of money. And this is the other thing that I talk about all the time, the power of compounding money. If you can compound at 15%, which really, people think, well, I want to make 30%, I want to make 40%, I want to make 25%. That's what people tell me all the time. If you can mitigate these expectations and be realistic, and I'm saying at 15% you'd be a superstar on average, that you'll feel a lot better, and it'll be emotional, less drag on your trading. So you need to realize the power of compounding, because the power of compounding, let's say at 10 or 15%, and there's a huge difference, but it is doable, and there are guys that do this. Many guys, actually. But the fact is, if you can compound your money at 15% on average over 10 years, you 4 times your money. If you can do this, compound your money at 15% over 15 years, And yeah, 15 years at 15%, you 8 times your money. This is how wealth is created. This is like what I talk about. People look for the Holy Grail about trading systems and indicators, or even other managers. It doesn't exist. The Holy Grail is this: a robust methodology that trades all markets, all time frames exactly the same, that has a tremendous amount of risk management instilled in it, that you have time to compound money. And then the power of compounding, that is really the Holy Grail. There is no magic system. It's not some guy that went to Wharton or Harvard who's going to make you money. You can do this. There are guys that are doing this. So, jumping to my next idea, I said, thinking in terms of possibilities and probabilities. The irony is there are many people that think they have to have this high win ratio. Again, wrong. What you have to do is mitigate the big losses. You have to realize when you put on a trade that it's 50-50. Because you put it on and you did this so-called research, or so-called that it broke out or it went over this moving average or whatever, it doesn't mean the trade has to work or continue. Anything can happen. Once you realize and take out the emotional baggage of it being right, and that the possibility is that the trade won't work, you're progressing. And this is what this is. This is a learning curve. And don't expect to get it that quick. It took me a long time to get it. And I had a mentor who was on my head teaching me and blowing in my ear these statements, not the magic system. And it's the same idea with the turtles. The turtles from Eckhart and Richard Dennis, they had a whole, let's say, 2-week course of, let's say, 10 business days where the majority of the time was how to think as a trader. Next issue. If you can believe anything can happen, this is a key point. Please write it down. Because when you believe that anything can happen, you're going to protect yourself. You're going to put stops in the market. You're going to let things run. You're not going to cut your profit short. And you know what I said? Believe anything can happen. Who would have thought that the NASDAQ would have fallen the way it did? Who would have thought the US dollar didn't crash, didn't become toilet paper, or at least not yet? Who would have thought the euro that was at 160-ish is now in the 120s? Who would have thought? Who would have thought crude oil would have gone to 147 in 2008 to fall to 30, I think it was 34? Anything can happen when you're trading. Anything will happen when you're trading. You need to internalize that. You need to believe and realize that nobody knows anything more than you. Nobody knows the future. It's like, why listen to Kramer, with all the respect, on Mad Money on CNBC? I mean, so he gives his opinion. Who says he's right? He doesn't have to be right. No one knows anything more than you, and what you really need to do is you have to have a trading plan that matches your personality, and you got to follow it. You have to have the discipline, that you have no fear, because when you have no fear, you have the discipline. When you have the discipline, you can stay focused. Many times, of those that you watch my videos, I have a chart behind me, behind my desk, that I look at. This is what keeps me in the game, that I can put on trades, take them off, because they don't work, because I know what my goal is to keep on building this long, ever-going equity curve. And if I don't follow my plan, I'm not going to build my equity curve. There are people that I talk to, a lot of people. They think you can avoid losses. Well, I haven't actually met them. The only thing I've read about was with 2 of them. One was Alan Stanford, who stole about $7 billion, and Madoff, who stole about $50 billion. Losses are as natural as breathing. The reality is, when you trade, there's 4 things that are going to happen. You're going to have the possibility of a big loss. Your job, because you believe anything can happen, is that you have a stop immediately in the market, immediately when you place it. But you know what? That doesn't guarantee anything either, because markets can gap, markets can run through your stop, markets can go limit up or limit down, so there's no guarantee, there's no certainty. And we're dealing in probabilities again, like I'm saying, or potentialities. But then you have the other, this is a reality, you're going to have the majority of your trades, you're going to have small wins and small losses. Trades that work and trades that don't work. But it's okay. They take each other out. They cancel each other out. The other reality is, over a rare period of time, a rare number, is you're going to have some trades that you stumble into, not that you did anything different, except that you were consistent and you followed your plan, that really, really worked. And then these handful of trades per year will make you the money. So those are the four possibilities. That is such an important concept to internalize, because then you have no fear again. You know this. Your expectations are already met. When you put on a trade, most people want it to work. There's no guarantee it has to work. The fact is like this. When I put on a trade, I say to myself, how much will this trade cost me to see if it will work? And when you think in that terms, there's no fear again. I've already determined what my loss is ahead of time. I accept it, I'm willing to take it, and I just put the trade on. That's a lot better than people that are trying to avoid losses. You can't. Knowing the future. I've yet to meet anyone who knows the future. No one knows the future. And you don't need to know the future in order to make money. You just be consistent with a plan and put on every single trade, because you don't know which trade is going to be that one that's really going to work. And you have to be consistent. And it's also, I love this sentence that George Soros came out with, where he said, good trading is boring. That's what you want it to be. You just do the same thing over and over again and let the probabilities work over time. What's exciting for, let's say the houses in Las Vegas, the casino houses, they do the same thing over and over and over again. They have an edge. And they know they're going to make money. Otherwise, they wouldn't have these beautiful casinos. So that's why you need to be consistent, like they are. I said this already, because these issues that I'm telling you are so ingrained into my psyche, and I really hope they become ingrained in your psyche, that the only certainty is uncertainty. When you truly internalize that, you really, you have it. That you're not going to have this fear, or it's going to reinforce all the discipline that you really do need. Again, I said this right off the bat. There are no magic indicators or systems. Simple, robust ideas are what hold up in the real world. Complicated doesn't hold up. I had a talk I did on YouTube about moving averages. People underestimate moving averages. If you put it into perspective where you don't put the expectations and you understand the probabilities and the possibilities, moving average combined with some other very simple indicators becomes some very powerful tools. When you start to believe in uncertainty, you start to believe that anything can happen and will happen, you protect yourself. You put stops in. You also let profits ride, because you don't know how far something will go. It'll go to the craziest expectation. And on a personal level, I can think of many things. There were years I had a Canadian dollar trade that worked. I didn't know anything about the Canadian dollar. Or even, I remember 2010, I was on vacation with my family. I had a cotton trade. One out of a couple, like 100 trades out of the year. Didn't think anything about it. Well, cotton went up about 300%. I'll give you the next fact. I didn't catch all of it. I bought the breakout. It ran up, and it was a nice move, beautiful move, made a lot of money, and started retracing, and I got taken out by basically my protection, and then with Murphy's Law would happen. It took off again. But I didn't care. It just didn't bother me. Nothing to think about. I followed my plan. I kept to my plan, which you will too. I've already been alluding to these issues, but they're so important. When you start to believe anything can happen, why would you ever not put a stop immediately in the market? You have to. Because then you realize that this trade can go against you and take a lot of your hard-earned money. And I said this again. Maybe this will be the third time I'm saying it, and to reiterate it. And you know what? It's worth reiterating. Why would you ever exit a position that is working? I've had students tell me, well, it was working and I got bored. And I'm like, geez, that's really not the most clever thing you could have done. So you never want to exit a position that's working. When they're not working, you want to get out ASAP. You want to run. You want to get out as quick as possible. And if you really believe that anything can happen, why would you leverage it? Why would you take a bigger risk when you know that most of your trades aren't going to work? And, because then you're putting yourself in financial danger, because there's a drawdown out there that will stop you from trading. And you don't want to stop trading. You want to build an equity curve, not just for yourself, but for your family. And my children are also trading. My daughter is 20. She started when she was 12, so she can compound money. My son started 13. He's 19. They got a good 50 years of compounding. It becomes an astronomical amount of money due to the fact of compounding. Do an internet search on compound interest and put in one of the charts. Do 50 years at 10%. See what you make, and you'll be in shock. This is really the power of compounding. Why have fear? If you have a plan, and in this plan, at every moment you know exactly what you should be doing, why are you scared? When you have a trading plan, you know exactly what to buy. I teach this. What exactly to buy? You want to buy the strongest, you want to sell the weakest. If you can put on a low-risk bet. What does it mean, a low-risk bet? Basically, you look at your account size and you say, I'm willing to risk approximately 1% of my account size. So if I have a $100,000 account, I'm willing to risk $1,000 to see if this trade will work, if this stock trade will work. And it's from the entry, which is a breakout. I believe in breakouts. They're simple, they're vanilla, and they hold up over time. To where the stop is, which I teach you where the stop is also. Then you know how much to buy. You know what to buy, how much to buy, and then you follow it with, basically, it's an ATR stop, a version of it that I wrote in 1998. It was an article in Stocks and Commodities magazine on basically a volatility-based stop. It'll keep you in the trend while it's working. And when it touches it or violates it, you get out. There's nothing to think about. Pretty simple, pretty robust. And then you have all these risk rules, risk management rules, risk per trade, risk per sector, open trade equity risk. It doesn't have to be complicated. Complicated doesn't work. I said it, and I'm repeating myself again. No need for fear when you have an exact plan. At all times, you know what you should be doing. This is a key point. You've accepted the uncertainty of the trading. You've accepted the possibility that you're going to lose this $1,000, let's say, if it's a $100,000 account. And you're okay with that because you know that your deal is that you're making money, losing money, making money, losing money, staying out of big trouble, and making yourself available to be at this table at the casino to be dealt a good head of hands. You have a good hand, you can make a lot of money. You don't know the future. How do you know the future when you're playing cards? You don't know it. Because the other thing, too, that you've internalized that you're going to make your money over a very long series of trades. 100 trades, 200 trades, 300 trades, 1,000 trades. So what does any one trade really mean? It means nothing. Again, to reiterate, you're going to have many losing trades. The key is you got to keep the losses small. Losing small amount of money is not a big deal. It's the cost of doing business, like a restaurant. They have a cost of food that they have to throw away. Can you imagine taking your hard-earned money and buying food and not selling it because then it spoils, you have to throw it away? Terrible. But you know what? The smart restaurant guys, they know this. They don't care. They don't get upset. Same thing with the smart traders. The smart traders know that there's no way of avoiding a losing trade. If you try to avoid a losing trade, you're going to lose more money. You're going to make a mistake. Discipline. How do you get discipline? You believe in your trading plan. My trading plan is based on Richard Dawkins and my mentor, which is a breakout policy, breakout idea. Simple thing that convinced me, because I like keeping things simple and, keep it the KISS principle, keep it simple and stupid. Let's say like this. Richard Dawkins, he lost all his money in the Great Depression, but in the 1940s till he died for 50 years, he trend followed and he used a breakout strategy. 50 years. I mean, if he can do it, guess what? So can I. My mentor, he has been trading since 1979. Started with a $200,000 account. He ran it up to now $18 million by compounding. If he can do it, so can I. And if I can do it, so can you. If you can develop this winning attitude, which I can help you with if you want it. How do you believe it other than this? Okay, don't take my word for it. Do an internet search on Richard Dawkins. Do an internet search on William Eckhart. He's been trading for decades. Do an internet search on Salim Abraham. Since 1988, he has about an 18% compounded annual rate of return. You can email me, and I'll give you a list of guys that have been compounding for decades using this methodology. But I'm going to tell you, it might not be right for you because there are going to be drawdowns. There are going to be losses. You can backtest these trading plans. I use two things. I like Metastock. It's very easy for me. And the other thing is you can use trading blocks. Build it in trading blocks. Test it. See what it really looks like. Study the results. Don't just study the results. Study the drawdowns. How do you feel going through a 30% drawdown? How do you feel for 2 years not making money? Let me tell you, that's the reality. Realize that nothing is perfect. It doesn't have to be perfect. It doesn't have to be perfect for you to make money. Understand those 4 ideas of trades working and not working, big losses and small losses. That puts a lot of stuff into perspective. At least it did for me. Internalize and accept that you're going to have a lot of losses. And it's okay as long as they're kept small. This is what I want to show you. This is like the kind of chart that I have on my wall behind me. I know that I'm going to have, watch my mouse here, ugly drawdowns. Here's one. Here's another long one for almost 2 years, a year and a half. Another one, another one, another one, another one, another one. But you know what? The idea is to get from here to here. That's why it's called a marathon. You can't avoid the losses. You can't avoid these periods. Look at this period. From here to here, you didn't make any money. From here to here, you didn't make any money. Here to here, you didn't make any money. We haven't taken out this last equity peak. And this is a hypothetical to give you an example to look at the big picture. Have a long-term perspective. For me, trend following is a lifetime strategy. I don't want to do anything else. What else is out there that's liquid and transparent? Real estate? Hey, we had 50% drawdowns and more, and you couldn't even get out. Okay, stock market. In the last 10 years, you had 50% drawdowns. Why would you even want to think to do buy and hold? The winner's mindset. This is what I wanted to talk to you about. It's not about the indicator. It's not about the system. It's much more important. And really what I'm offering you is, I say as a mentor, because I give you the methodology, I help you develop your trading plan, but the fact is I'm here for you. We have one-on-one webinars. It's just me and you, or if it's you and some other people in your office, and we talk and we try to develop your trading plan. I give you exactly what I'm doing, what has worked. You can copy it, because why break it? If it's fixed, why break it? But it might not fit your personality. So I help you develop your own. And then after you have your trading plan, I ask to see your charts. I want to see your trades. I want to see what you're doing. Because I want to make sure that you are doing what you should be doing. That you're following your own rules, that you're focused, that you're disciplined, and you're patient. This is like the whole principle. I give you exactly what I've done over the late 18 years and help you apply it to your own personality. If you want, because of this webinar, for the people that are watching this webinar, and even if you're watching it on YouTube, because I'm posting this on YouTube, you can take $200 off and on a course, and it's one-on-one. And there's an offer here. This is the offer number. And I'm your private teacher. The idea is that I can make a difference for you. I really can. I truly, truly believe it. It's not a get-rich-quick. It's not retirement in the box. You're going to have to do a lot of work. But if you really, truly want it, I'm here to help you. Let me give you my contact details, and then I'll take some quick questions. You can see my email. You can call me. And the best is to email me first, because I get a lot of calls during the day, and I can't just take one call to the next. And I trade, but most of my trading is done first thing in the morning. Let's go to the first question. Trend following. It's very hard to trend follow in this current environment. Okay. Well, okay, thank you, Bob. But let me say it like this, Bob. The reality is like this. There's always going to be periods that are rough. 2005 and 2006 were a disaster. We're really, really tough. But then 2007 and 2008 were amazing. Amazing trend following periods. I mean, you had wheat that went up crazy. You had crude oil that went up. You had sugar. You had silver. It was crazy. I mean, big profits. And then 2009 kind of was miserable. And then 2010 was good. The idea is that it becomes a lifetime strategy. Okay? I'm just going to take, the best thing is also, I want to say, you mentioned about compounding money. There's a gentleman, there's an article, actually it was in a magazine called Marhedge, that a gentleman took $300,000 to $18 million. He invested it with one of the turtles, who learned under Richard Dennis and Bill Eckhart. He invested it with Tom Shanks under Hawksbill. I think it was in 1994. And this is the idea of having a winner's mindset. That this guy went through all kinds of drawdowns, long periods of nothing happening, like this equity curve, but probably a lot worse. I mean, there was more steep drawdowns, but he stayed in the game and compounded money. If you want, please email me, and some people already have. It's Andrew@trendfollowingmentor.com. And I'll send you the article. And it's an institutional magazine called Marhedge. And they wrote about Tom Shanks. And they wrote about his investor. So, anyway, I invite you to learn more. If you really want to become successful and you really want to be committed, understand that this success is over long periods of time, that it's a battle, that there are drawdowns, there are losses, but then there's also ability to change your life. I'm living overseas. I'm living 2 minutes from the beach because I was able to compound money over decades. For 18 years, I've been able to do this. I do two things. I do my own trading. I manage money. I also invest with other CTAs, commodity trading advisors, because I like the transparency and the liquidity offered to me and the whole idea of all markets. And most CTAs really don't get it, but there are a handful that really do get it. Anyway, if I can help you in any way, I'm here to help you. This is Andrew from TrendFollowingMentor.com. Thank you.